Good morning. This is Fari Hamzi. It's 8:39 a.m. on Wednesday, October 20th, 2021. Okay. We It's the second series of moving our morning brief into Wednesdays at the same spot. It's 8:30 a.m. Eastern. And also we make just want to remind you, we made the sign up easy so that when you sign up, it's good for, at least for a quarter. I think it can't go more than that. Maybe we can figure that out too. But those who have signed up, they're going to get reminders the day before, 4 hours before, an hour before, which is a standard. But you don't need to re-sign up. But this way, it queues up and get everybody a chance to be efficient and reminds them that every Wednesday at 8:30 we're going to have this. That's one. Two. Again, I'm going through my housekeeping and stuff. Welcome everyone to this new format. It's going to be posted on our video channel, which is on YouTube, and you're going to see them there. Okay, that's two. Number three, a couple of housekeeping stuff. Thank you to Nancy and Peter. Our options are through the roof. It's a launch command. I mean, we're killing it. Okay. Now, here's the problem. The reason I bring that up. We've done about 50%. Actually, it's close to 100% if you get actual money. We use about 60% of the money. I don't think we never got there even of the 40,000 initial start. We're at almost 60. But cash on cash, we're close to 100%. I mean, people are just. I mean, the other trade broker is saying, "What do you have for breakfast?" I said, "It's not me. It's the technology. It has nothing to do with me. It's this watch list. This is what's telling us what to do. And this chart, we take that, which, by the way, you go on the options that are getting it. These charts that are getting sent to you. Okay? Nancy, myself, Kevin, and Admiral Esposito look at it. Mark has been a little bit busy, hasn't been as active, but and then you have a live, what do you call it? A quick page there, very, very quickly. You see what our net open positions are. This is by invitation because I was sharing, but you see what we were doing. Okay, so you see live where we are. There's and then there's a closing result that you see. Okay, that's that. And we are having sometime, I forgot what it is. Next week I think it is, whatever, or weekend, whatever, or Sunday. We're raising the price by 50%. Okay, it's $375 a month. But those who are already in, they will be honored. So we don't change the current price. We give you a few days in advance, and that's what it is. We know it was coming. We've talked about it a couple times before. It's here. The results speaks for themselves. You can see it, just tremendous. Now, part of it is also I add a little bit of my market timing skills. We don't want to discuss that. I think I'm okay there, and that goes there. All right, and then now next problem, very quickly. OTF system is really. I mean, OTF Zoom is slightly becoming more of a trading system environment on the NQ. It's got two Zoom rooms, ES and NQ, and the third room is the what do you call it? I don't have to actually put some pictures, so we don't have it. Is the trading system, and it's been phenomenal. It did 43% the other day in 2 hours on Monday, and we're at 97. I'm not asking people to come into beta test because we're out of the room. We're at 97 already out of the 100 in the room. So my only request to you guys is if you don't show up, you cannot be beta tested just in name. Is that what a rhino is? Republican in name? Yeah. So somebody called that. I won't say who called Colin Powell that. Yeah. Shame on you. You can't be a beta tester just in name. You need to show up. Why? We're out of space. If you're not showing up, we gotta give it to somebody else. Okay. So we'll pick it at random. Of those who have not shown up, there are a number who have not shown up. So, having said that, let's get on the road here. We're gonna talk here. We're gonna talk market timing. Okay. No, I'm sorry. We go to economic calendar. That's the sequence we have. Sorry about that. Okay. It's a Wednesday, so let's look where we are. Mortgage apps. It's a black report. Southern quarter. I want to see green or red. EIA coming up at Wednesday. I mean at 10:30 this morning. Who's speaking? Evans is a big-time dove out of Chicago. By the way, he follows Admiral Tico on Twitter. At least his office does. So is whoever is in charge at Philadelphia. I wish I get Bullard on that. Bostic is Atlanta. Kashgar is Minneapolis. Coles is, I think, the vice chair, isn't it? No, Clarida is the vice chair. Yeah. By the way, Bullard here. Bullard speaks this afternoon. So this time, watch. This is another big wall, dog. So watch this time frame on your time in terms of market. Daily is out of San Francisco. She's from San Francisco. 2 p.m. is Beigebook. Tomorrow, jobless claim. Crucial. That's what the estimate is. Very, very quickly. We used to do this every day. It just was too much. I had so much more to go, and I'm just totally time bankrupt. So we had to. We could. It wasn't right to cut it off. So this is a compromise. Do it once a week at a preset time. Okay, and so we're looking for jobless claims of 285 to 319. Okay. Now at 293. Yeah, we need to take down a little bit more. Okay. All right. And Philly Fed, don't forget this one. That's a mid-Atlantic area. It's important. On the East Coast, yeah, mid-Atlantic. Oh Jesus. Oh jeez. Oh jeez. You see what's happening? Yeah. Prior and then consensus. Wow. And the range is no more than the last one. Oh, not good. I don't like the trend there. Existing homes. Never. Oh, and then LEI. Okay, I love LEI. I don't know what they call it. The black reports should be a red. Leading economic indicator. Have you heard of CI? We want to see in the future, not in the back, in the rear. Hi, Hamid. How are you? Welcome. We just got started. Yes, it is being recorded. It isn't. No. Okay. Now, let's see. Existing home sales prior 5.8. That's a consensus. Guys, I need more coffee. I'm sorry. I went to bed at 11:30, 12 last night, but still. The night before I was up late. 575, 616. Okay, so kind of mid-range of that. All right, this is on Thursday, correct? Thursday, tomorrow. And then William speaks. That's New York Fed. To me, this is the guy's second guy in command, the one who runs New York Fed. And then Jerry Powell. Okay, 11 on Friday, and we have composite. PMI composite. Okay. I don't care about that. Daily speaks again. Okay, let's see what this is, and there we go. This is not a big, crazy week. We just had expiration. Okay, so it's a week after expiration. The next one is going to be end of the month. That's going to be busy with GDP and a couple other stuff I forget, but that's a crucial one. The last one. First one is a non-farm. So this is GDP stuff. Hold on. Where's the LEI? I want to look at LEI. To me, this is the way I think. I want to see the slope of a slope. I want to see the derivative of a derivative. So. See, this is not good. And look at that range. Holy macro. This is not good. All right. So the econ data is softening fast. Maybe that's why we're rallying. Yeah. Maybe it will be more cheap money from the Fed. All right. Let's go to charts. Remember, charts don't lie. Politicians do. So let's go here. All right. Timer. Now, you know that on Friday, we went flat. It was excessive. We're at 2 sigma. But as it turns out, that was a little bit premature. I can't change now. These 2 days have been recorded. And now today's started. So even if I jump on it, it'll be recorded for me as of tonight per Private Digest rules. Well, we have put, if you look at our options, yesterday we put another, we were trying to get 2 trades in because we had 0 positions there. We try to keep 5 to 8. But as you get to it, 5 to 8 is okay if you go in and go long. As you get up there, there's no logic to get 5 to 8 if you're going flat. You can't jump in. So slowly coming. So we tried to put 2 in. One of them we executed. One, it's on the holding pattern. You may need to look at a chart one time. Okay. So we're still keeping a long position, and the OTF charts are also saying we should be long. Hold on. And overnight, look at overnight. This is nothing. This is where this changes. Nasdaq is still up, so on the future side. All right, so let's analyze timer chart. We're up there, 114. It's a beginning of overbought. Nothing extreme. Not a warning sign. Friday was maybe it was a little bit premature. I don't know, but I declared in the morning that most likely we're going to go flat by the end of the day. When you say that to timer chart, I'm saying I didn't say that. No, I said we are going to, well, not most likely. So we are going to go flat. Yeah, but remember, we had held up quite a bit too. We had a lot of positions on, and also, our market timing package had just hit it exactly right there, and so the title I think it was even published. No secret. This was the reason. There we go. It had hit 44.40, and it had gone a little bit above that. I think it played with it, touched it on Thursday. So on Friday, when it punched through, I was out because this is going to get executed and we're out of. And so we took it. All right. A little bit prematurely. It is what it is. Again, guy, find yourself. Here I failed somewhat. Yeah. I'll give myself I don't know, B plus, A minus on this call. So it is what it is. You learn. You're not a good trader or a bad trader by one trade. So it's a cum of all your work. So okay, CI is rotating. Had a little bounce there. There's a kiss, not a cross. This is a big cross. This was the first cross, a second cross, and a kiss. So as it's shaping up, we're slowly pulling up. They see something we don't see. I don't know. Could be my breakfast. I don't know. All right. You can see the up to down ratio is staying low. That means that we're on the positive side. This is a warning, but that was a flush. That took a lot of people out. All the weak longs got flushed. That's what the market does. It does. It's called self-cleaning. Yeah, it does some of that. So, folks, if you're just joining us, please come in, take a seat. Don't forget your latte. It's early. Yeah. Canaries. Okay. I'm really interested in the two subcharts, subgraphs, trans and Russell, because they each have meaning of what we're trying to do. Russell is very important for NASDAQ. Trans is very important for SPX. All right, let's analyze it on a D trender. Okay, you could see we're gunning for the all-time high. Those are all-time highs for each asset, or each index, I should say. This is not cooperating. It came back. You see a little W there, but not really cooperating. So is NDX getting ahead of itself? Always does, because this has got a lot of big caps in there, and big guns, move. And how do you see that? How else do you see it? You see it also here. Distribution here of the advanced decline stuff is not keeping up with the underlying. So there's a little bit of caution there. Okay? It's not fully vested by everybody in that concept. That's why bigger names bigger names are moving up, but a lot of smaller ones are not there. That's why we like to look at Russell. Now, on the other side, transportation did a channel breakout with a gap on Monday, and it's ratcheting up. So, I'm sorry, that's not Monday. That's Friday. That's Monday. This is yesterday, Tuesday. Today's Wednesday, right? Yeah, I forget what day it is. Seriously. Okay, what happened to our D-trenders? We are all positive now, aren't we? Okay, this is a good signal. We have 8 positive. So I keep track of this as a scoring indicator. Well, how many of them I have? This is 50 bars. D-trender, this is 200 bars. Basically, a D-trender is a differential between price and average. This is used with big money managers, big guys. They use this to time overall coming in or pairing off fast and ahead of a disaster, and then things happen. They never go flat. They really don't go that much short. We're very selective, but mainly it's the big boat concept of but somebody and especially if they're trading something like this. If you're a hedge fund and you have a, let's say, 5 to 10 day volume of the stock, you gotta be careful. And that happens. That happens. There are companies that have known that positions they've taken by some of these hedge guys very quietly. They don't discuss it. They're like 20 days of the volume. If they sell their position, it would be equivalent of 20 days, because there's two things. The position is too big a little bit, A, and B, the stock is not that widely traded, okay, relatively speaking. So that's a big risk. That's why they get very, very cautious, and those they throw in slowly. Because if you sell that big against yourself, you're just pushing your own position down. So, and if you buy too fast, you're raising your cost basis. So it becomes more of a operational challenge, not the analyst saying we gotta be out of this room. I just play or get into it. Becomes more of how do you get in. So that you're gonna watch. And typically you're gonna see it more in these names than that, just dollars. All right. SV1 Momo. Okay, this was the one last time we had a presentation last week. The signals were not there. It was my apology because different login. For security purposes, some of our indicators like these, they only work on certain logins only because they're not distributed anyway. So part of that is, and then I didn't know that I was logging on different login here for this new stuff. Remember, we swapped some computers and bought new stuff, and it's just been chaotic last 2 or 3 months. But this was about a month ago that happened, and last week I apologize. But that's all good. This is life on full afterburners, as Daddy wanted it. So he always told me, young man, in this household, you're on full afterburners. If you can't handle it, get out of the way. And I couldn't say no to him. Are you kidding? I was firstborn. No was not an option. Yeah. He was at Air Force Academy graduate #1, pilot of the Shah, and barnstormer. He loved aerobatics. To tell him to no, he would disown me. So, and I think he's watching me. But we're on buy on the weekly. This was missing. Okay, the chart was here, but this was missing. And so, of course, more importantly, this one. And look where it went to a buy. Not bad. Now, this is trend following. And as not optimized, I have not touched this since, I'd say 2006. This was done in California before I even lived for Chicago. Why? Don't play with your indicators. Settle your mind what you want. Do some serious studying quickly up front. 6 months, fine. 1 year, whatever. 2 months, whatever that is. Cut off and stay with it. Because you want to see that with different textures. You start playing with it, you have a multi-factor model. And you know a little bit about statistics, you're just buying disaster. It's a curve fit, multi-factor model. You're just buying, you're paying to have a disaster with your own money. Don't do that. Okay? So we are buy and buy, daily and weekly. Now, a question often comes up, hey, Fari, your system said short, and you're staying long. What's wrong with you? Hold on, Jacques. Okay. I am the system, not the charts. It's a preponderance of evidence. Would you fly a 747 if it had Elon Musk did the AI package and you had no cockpit? No. At the end of the day, you want a guy sitting in the command seat and then one in the second officer. So we look at a lot of stuff. This one may be long or short, but that's not preponderance of evidence. Remember, it's a civil case. It's not a criminal case. It's a civil case. So it's not beyond a reasonable doubt. There is no such a thing as beyond reasonable doubt in market. You're fooling yourself. It's preponderance of evidence. So each of them is an input, but none of them are the controlling inputs. Okay, you are the controlling input. You're the one who's going to pull the trigger. And in this case, I am the system. I'm pulling the trigger. So that should clear that question, which often comes up. Kevin, we need to put that in FAQs. Kevin Stores just joined us. He's our FAQ man. So, and again, this week, just like last week, is our FAQ week. Remember Infrastructure Week? Yeah, exactly. This is our FAQ week. Remember, we're a mix of Seinfeld and what do you call it? Cheers, as applied last few El Presidentes we have, which each of them effed up in a different way. So that's why I stay neutral and I don't vote. I just make fun of all of them. I don't know why we even elect these idiots, but here we are. All right. Nobody else is willing to work. Yeah. The problem is the media. Media goes after them so hard. Yeah. Nobody was willing to subject themselves to this. Are we good here? Yeah. Okay. Same time. All right. VIX. What does this says? M. Murray. Why are you saying M? Hold on, guys. No. Hold on 1 second, guys. Why are we doing M? Let me take a look. That should not be in. See, that's not updated before. Okay, this should be, we're on a Z count. By the way, we're dropping crude from all of our setup. I know a couple of you guys had a heart attack. That's okay. Or is it the X now? I don't know which one is that. Crude November? Yeah, I think we're on the X. I think we're on the X. I'm saying it should be on Z. Yeah. Nobody was trading it. Actually, it has a beautiful chart. I had a hedge guy coming in complaining that I was really looking forward to that. I said, well, don't. It's just, you know, Bollinger taught me a lesson. If not enough people following what you're doing, that may be a good product for you, but not for them. Drop it. So concentrate on 2 or 3 good ones and nail it. And that's what we have done recently. And we've all actually we've done.
Muted.
I'm
Unmuted.
on mute. Hold on, guys. Hold on. Did you guys been hearing me or no? I know somebody says I went on mute. I hope I was. I thought I was okay. Any feedback here, guys? 1, 2, 3. I was on mute. I wasn't gone. How long was it gone? I didn't touch anything. Don't tell me all this time you didn't hear me. Hello? Was okay for most. Okay, I'm sorry. All right, sorry. Somehow I noticed the software went red in front of me, says you're muted. I didn't touch anything. Okay, sorry. All right, so I'm proud to say this is the first. I got this done, this VXN done, in my laboratory before Robert Whaley finished his, and then was introduced by SIBO, which is the original VIX, but applied to NASDAQ. This is the new VIX, which leaves a backdoor for the market makers, unfortunately, but SIBO is known for that. This one computed by most popular in volume of the strikes around the current price of SPX. The old one, this protocol is the same as now. I think it's they call it. I forgot what they call it. VXO. I think it's VXO. They call it. Yeah, VIX old. That one is for S&P 100, not 500, and that's a true measure of volatility. That's why Robert Bailey left actually, Steve. This goes by popularity. This goes by distance from the current price. And it's up and around. It's a cube. It's a cube around the price moving in the vol space, if you will. So, anyhow, now we were ticking down. We're in the channel. I believe this a little bit more. This is more of a manipulatable. And this because they wanted more trading. It was all about commissions. It was all about, not commissions, exchange fees. This was all about exchange fees. Very popular. By the way, if you read my ex-neighbor in Chicago, Ewan Sinclair. He did a book on, it's somewhere in here, a book on volatility that published by Wiley also. Volatility trading. Okay, first of all, if you have, okay, oh, for after the media comment, I see, got you, 5 seconds, I see. Maybe somebody was, they're here. Maureen, they're here. They even, they're muting me if I make a comment about media. All right. No, I don't mean fake media. I'm not going there. Okay. Media is there. Okay, both sides. They're both sides, and we're lucky to hear both sides. By the way, that's the beauty of our system. We're lucky with both sides decide for ourselves. The only problem is that you need to have some IQ, right? We need to have some IQ, and some of us, especially in Florida, we don't. End of that story. But anyhow, volatility trade by Ewan Sinclair. He works for. I think he used to. Maybe he still does. Bluefin. Bluefin is it's kind of an offshoot of a bunch of guys at SIBO. They actually have an office now in the building behind SIBO. They're vol traders. Anyhow, he created an automated system to trade VX futures, right? This is published by SIBO futures division or subdivision of the overall exchange. So actually, it still has a pit right now. It still does. I mean, I don't know about COVID time, but when I left Chicago, still did. While the rest of it, SIBO was gone. This is the building that looked like NASA. You wouldn't believe how many thousands of computers you would see from the gallery area. gone, all gone, and the infrastructure is set there. All these cables are there. Monitors are gone, but you see still the catwalk for the cables up above, except the VIX pit. The VIX pit is there, and there's I think one small pit. All of FANG goes there too. All the Fangum stuff goes there, all in one area, and then VIX. That's it. Everything else is gone. Well, anyhow, he showed that in the 2008 on and 2009, the hedge that would use with VIX is not paying you off. Very interesting study. That all the people who said I'm long SPX and I think the market is going to get into trouble. For example, the SQ. SQ tells me SQ is like here. I need to build a hedge. If they were just the equivalent delta adjusted VIX futures position, it didn't pay back. It didn't. But people jumped in like sheep because it was a new product. That's the problem with us as financial engineers. We get something, we're not testing it enough, and we throw it out there. That's why everything now takes so much longer with me. It's not because I'm getting older. I'm getting wiser. I'm saying these things we test it, retest it, or give to other people to test it and come back and see where we are. But people jumped in and bought all these VIX calls. Remember, it's inverse asset. VIX calls, and yes, VIX moved, but the delta calculations were off, and the same rules didn't apply as an inverse asset. And also, it's kind of a bracketed. We are going to go so much up or down. If I go here and say, give it to me on weekly, here's what I'm talking about. So here's your bracket, okay? I mean, the worst we had was around 80 recently during the bottom of COVID. This is like March 23rd, 22nd, the spring equinox of 20, which we talked about a couple of weeks earlier as a possibility of turn. It's one of these webinars. It's on the website. No edits. This is not this is not Nixon White House with 18 and a half minutes missing. Dad, forget that. Yeah, because he would hate me when I say that. He was friends with Kissinger, so if I say anything like that, he's probably hearing me now, and he's gonna give me a son. I need to talk to you. You can't say that stuff, Daddy. Yes, we can. The beauty of the system is that we can. All right. All things being equal, so be careful. Don't try to go in there and hedge with VIX. Okay. If somebody like Ian Sinclair cannot get his hedge right, you and I cannot. Trust me. He was a neighbor of mine. And we shared the sun deck. So a lot of times we sit down and have a chat in the evening, and glass of wine. And his wife would cook, and it's not his astrophysicist from Cambridge, if PhD. Yeah, if he can't get it right, I don't think we can. All right. Best thing, my suggestion, I would do more optimized. I would hedge with individual names, actually, with the puts. I would buy puts with individual names. Yeah. You have to do you calculate, what do you call it? It's simple too. It's much simpler. You don't have to even measure the beta. You just say, hey, how many shares I have divided by 100. That's the number of contract puts I want. But you want to do a little bit beyond where you want to be get out. So it's more of a floor. Okay. If you're up here, you want to buy these puts, not right underneath it. Okay. Because if you come and hit you and go back up, but you want to buy disaster sometimes. Whoa. We're moving 2 or 3 sigma channels. Okay. Yeah, not underneath where you are. That's more of a trading. That's not an investment floor. Your investment floor should be 2 or 3 sigmas below, maybe even more. 4 sigmas below where you are. Yeah. And that's also, it's very cheaper. That insurance is cheaper also. If it doesn't get hit and go back up, that was it. Boom. Yeah. Okay. Let's go to TD. Okay. This is what I want to talk about. We've talked about that a little bit. Bring that up a little bit. Yeah, this is to me is very crucial. This we wrote in 95. No, 98. This is 98. Yeah. Never been sent out. It's not for distribution. It's ideal for short-term cycles. We're peaking. Short-term cycles is a high and low. We're peaking. We're above 2 sigma. Here's the high. Most likely at this point, because I went flat here on Friday. And we're coming in. Our target was down here actually for a short term. I thought we were going to hit this as a retest and come back down. As you guys know, each levels for me is a excuse to get out and reevaluate, because nothing is a straight line. Okay, these are nonlinear systems, so we're not going to move a straight line. So that was my target, 44.40. We punched through that Friday. Go to 2 sigma, boom, I'm out. My checklist says you're out. Then Monday, hello, where that came from? And it's outside bar, and now you even yesterday. So now some of you had come back and said, "Oh, we think we're going to go make new highs." Okay, you're going to be correct. Fine, no problem. So let's see again. We get to that level. That's all-time high, and let's see what is that? That's 45.45. Okay, so let's see. Then we have to recalibrate. In the meantime, back at the ranch, we had 84 here today. Okay, 84. This is definitely overbought condition. Definitely has a chance to pull us back down. And hi, Monroe, how are you? And that's fine. Hey, Johnny. And so that's fine. That's where we are. So keep track. Usually when we go up there, and it's not a top. It's not an absolute top, but there's a double top maybe coming. Okay, and we will at least ease off. I'm not saying it's gonna be this kind of ease off, but it's gonna ease off. We don't know. But I know is that we're at extreme. Since the event, since the introduction of the ATR plus DMZ charts, I've come to appreciate something totally different, which is, hey, let's talk about fear and greed only. It doesn't matter if the market high or not. Why? Because that's a plenty of opportunity from greed to fear to greed. If I can concentrate on this, I don't have to be correct all this time. See my point? Because especially tops are messy, bottoms are easy. Look at here. Look at this baby. Boom. That was easy. 4 sigma on the weekly. What you do, you sell everything that you had through this process down. The wife, the kids, the mistress, the dog, the second home, the boat, all of that. Then you start buying it all back down here. Okay, that's it. That's easy to pick. You're not gonna be able to get on tops. Tops are very messy. They keep on slowly edging up, selling a little bit, edging up until we get to back here, for example. Of course, everybody called me I was nuts, and including Admiral Tico says, "Daddy, do you know what you're doing?" I said, "Yeah, I no, I don't, but I think we should be short." So he put in his missile key. It takes two of us, he and Admiral Tico, me and Admiral Tico. So he put his missile key, and we went short, and rest is history. Um, but listen. Did I have inside information from CDC? I don't know, but the guy answered my question. So yeah, it's a data point. You can take that in your head and say, okay, what are we going to do next? Okay, so that's the VIX here. This is RVX for Russell. This should be probably more than anything important to us than anything else. Why? Because we're trading Russell futures. I mean, no, we don't not trading Russell futures. We're trading Nasdaq futures, but this has the most impact on the Nasdaq futures. And now these two are the same protocol. Actually, so is this one. This is the only one that's different. The new VIX. These are all old VIX computation, and they look at the cube around the price. 913 February. You gotta go. Okay. SQ. We peaked here locally. All-time high is 170. Design was 100 to 150. Bye-bye, that design limit is gone. For years, it wasn't touched until August of 18, which led into December low of 18, which was our key test, where we dropped from last year, February, 21.8, remember, on the down. So we peak come back. So this says that some of the downside bet is being taken off. It's not as active. This is a tail risk on the downside, because remember, we have two tail risks, up and down. It's on the downside, so this is a put, not a call. This is a tail risk on the downside of for the SPX, which is the mainstay of the big guns. Mom and pops don't touch these; they're too expensive. The vol is too high compared to SPY. Yeah, the spread is the biggest problem. Yeah, but that's as we're pulling back down. Notice how we have peaked here. Sigma levels are near the highs. We've had to pull back, so we're not there yet. Are we? Did I thought Friday this we could shoot up? Is this Friday? Of course. Was I wrong? Monday? Yes. Of course I was wrong. And so was last night. This is updated once a day at like 5 p.m. after market closes Eastern. Yeah. All right. Let's go. We're running late. Oh, we talked this. Okay, we did talk. Okay, where are we here? Near highs again. It's -4. This is a quick spread. You betcha, as Sarah Palin would say. Yeah, here's good. We're long November and short February. Yeah, can't wait for January next year. It's F-23. Yeah, my baby. Yeah. Unfortunately, nobody built it. Clinton canceled it. That idiot. I'm sorry. I don't take sides, but the military stuff. Yeah. Okay. Do we have a rendezvous point? Yes, it's coming up. These are three stock sites. This is what was done by the great Tushar Chande. If you gotta read his book. If you read his book, you appreciate what CI has done. Or if you want to know how how great, or if you've been wondered how great this was, well, some of the work he did helped me get there. But this is the three of them, different input, just different inputs. Shooting, and we also we provide to it. I'm happy. This is shooting to a rendezvous point up here. Okay, and usually that's a decent topic. You know, I mean, it says that never listen. The country is net long. We have to be. We have to be positive, and we gear it that way. We're the son of capitalism, but we will have fear and greed. This is usually good for that. We have temporary short term topic. Why is that? It's also called inflation. Yeah. What is the book? It's on the website, senor. I'll show it to you. For a small fee, I do anything. I'm a whore. You know that. So, here. I'm like sometimes I'm like a professor. I give you readings, and then I quiz you. And if you don't get it right, Roger, there's no soup for you. Come back next year. It's right there, Tucho Chande, the new techno trader. By the way, it's not available. I mean, if you find it, buy it. Okay. And if you have a friend who's also a trader, get a copy for him if you can find it. It's out of print. It's very tough to find. Yeah, I found it somewhere in Georgia. Yeah, the new. It's on our again. It's on our suggested reading list. Yeah, yeah, yeah. Nothing in it with me. I mean, my only book is that one. Nothing in it for me. But I even talk about system trading. It's just give back. My mom always taught me, you can't take your brain with you either. Okay, yeah, because she came from a merchant class family that there were crystals and chandeliers and Tozex, what they call China, and this. I mean, crystals, fine china, all that. Very, very opulent lifestyle before the World War II, and she learned a lesson that none of that means anything over time. She was a kid back then, and then my family is basically professors and doctors and not lawyers, but doctors and engineers and teachers, and she was a decorated teacher in math by Her Majesty the Empress. She taught me long ago. You can't take your brain with you either. So if you learn something, pass it on. It will live. You will live in their brains. I'm saying. Yeah. So one day we're all going to be gone. Treasury yields. We got to hustle. This is 980. 2 more minutes, guys. We got to wrap up. Okay. This is the 10. What do you call it? 10. I'm saying 91-day discount. You got to change it to equivalent bond yield. 5, 10, and 30. So this is the commercial paper. This is your car financing. This is your house financing. This is your pension financing. Okay, think of it that way. These are SPR levels, support. I'm sorry, support, pivot, and resistance SPRs, and they're monthly. We're plotting daily against monthly. It's a very good way to see where we are against itself. Look what's happening with the 10-year. Yeah, yeah. This is actually good. This is economy is coming back slowly. But you don't want it to go. The issue is not what this is; it's the speed of it. This was scary. The speed, the rate of change. Okay, we're a derivative trader. We need to understand this, the slope of that line. Okay, otherwise you will be a stock trader. It doesn't matter. But the slope of that is moving. This. I mean, I own stock, but through options. You know, so you bet, Roger. Thanks for attending. So, and this is a pension, guys. So I don't remember last year. Number of my hedges in New York were telling me we're watching 1%, and we got close to that on the 10-year. See that? And that was the nervousness they had. We didn't exactly get there. We got a little bit lower. I don't know. This is July. This is that's not last year. Sorry. Hold on. That's not last year. But let's say we went to here. This is what they were worrying about. Yeah, this area. this area where they were worrying about, this 1% area. Okay, and we're not there. We're pulled up. I think that's not all-time high. That's a 7-year because that goes there. Okay, and this is using a monthly. So it's kind of an average things out, smooths it out a little bit. But you could see what the CIs are doing. The CI diffs, they're all shooting up a little bit. We've eased up a little bit on 30, but this is pension. It's not 30-year mortgage. This is the peg for 30-year mortgage. This is for the cars. So, all right. Next, let me finish one last chart and we're done. Hold on, this is a dip. Okay, this is one of my favorites. You can get it on. I've been looking at it since pretty much around 2008 problems. Let me close this. Sorry, and let's. And where's that's just funny. That's 125. That's good. I'll close this one. Okay, we're going. Here's what we want to look at. Forget the advertisement, guys. I'm in the webinar. Hold on. I'm finishing it up. I'll call you back. Okay. So, anyhow.
Unmuted.
Oh, I'm muted again. Oh, sorry. Thank you. That's what it was. Okay. We're back. Sorry, Airbus. No wonder you're Airbus and I'm not. Yeah. I work for her. Yeah. I work for two people here. Admiral Tico and Airbus. So you get that. And then that order. Maybe. Yeah, that order, yeah. Because I work for Admiral Tico 24/7. For Airbus, I work, 5 days a week. Yes, boss. Sure, the boss. Airbus, by the way, in the Navy, look it up on Google, is the one who manages the flight deck. So she's in charge. Actually, her command room is above the captain of the ship. So, okay, we're coming back. This is what I'm trying to get to. Last couple of presentations of this, we've done it like either PMT or the last our initial Wednesday format we're in now. We talked about what matters is the slope. I mean, the separation between these two moving averages. They are 20 and 50. You can set this up yourself. I suggest you look at the end of each day because that's when it's updated. No sound again? No, we're good. Okay. Oh, okay. No sound. Sorry. Okay, next time, text me, the Airbus. Okay. Yeah. I have my phone open. I can see the text. Thank you. Anyhow, percentage of stocks above 200 moving the average. Okay. And you can put this up, and I look at the 20 and 50. I think default is 10-20. That's too close. But you want to see at near the extremes what that separation does. And that's a good clue. Look what we're doing now. It could be we begin to come back. And this is a very worrisome. We're going up, okay? We're going up, and this is selling down. So that said, this was coming. This predicted that. Because there's a huge divergence. And in the soft topping formation, that's hard to pick. This is one of the best tools for divergence. Okay, so and now we dropped. Now look what it's doing. It's beginning to come back. It's in the channel now. If it gets over 75, we're really, and we probably would by the time we get to all-time high. What happens after that is what we want to see. So we'll. My prediction is this line is going to get above the red line, and then it's time to really scratch our heads and see where we are. Okay. Thank you. That's overnight, an update overnight, and that's how we usually close. So we do housekeeping, which is very short. This was a little bit longer. We do economic calendar, PMT charts, and we do overnight. Here's overnight VR, so we're slightly positive here, and let's see how things go. Again, keep an eye on this. This is crucial, RTY. Different scale, I understand that. But look at percentages. I always look at percentages. All right? Thank you all for attending. We got to get this baby posted, and we'll see you next Wednesday, 8:30. I'll be on time. Thank you, Ashley. Thank you, everyone, for attending. Thank you, Airbus. I'm sorry I didn't catch it. So, thank you, Roger.